Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, guys. Now time has come to talk again about your currency. Since we mostly on the last week we mostly have discussed the setups that are forming right now on the commodity markets. For example, yesterday our trade on Australian dollar, as you can see, the Brent bar has worked perfect. So here was our entry point. We have started discussion yesterday at this moment when the market has started to move up. We said since this could be another Brent bar sell on the forward time frame chart, you should watch for a deep retracement. That has happened, so 72.30 area. Right now market has completed the minor target and even has continued to move higher. So this tactical trade mostly has completed. If you are still holding the bullish position, that's okay, but just tight your stop and do not forget to match the stop to the market. So trail it with your position, because the Brent bar by itself already has been completed, and where market will stop and will turn to retracement, difficult to say, but you just need to protect your profit right now. So right now we will talk on the euro currency, but first I would like to show you the chart of the monthly dollar index. Once we have talked on the dollar index when we have discussed the perspective on the euro currency, but at that moment where we have talked on it, we mostly have discussed the possibility of the bearish scenario. So what chance exists, what could happen, but this was at the end of the September, before the month has been closed and before we will get the confirmation on some patterns. But right now situation is drastically has changed. So we'll take a look at the monthly dollar index. You will see that market has formed the double repo sell pattern. So we have thrust up, close below the 3x3, close above, close below. And on this upper direction, although market has closed above the 3x3, we have discussed particularly at this moment, the September month. We said if market will move higher, will erase the double repo, that could mean for the further upward continuation. But this hasn't happened, and double repo has started to work. According to the normal behavior of the market with the double repo, we could expect the reaching of at least the 50% support area. So it means that dollar index and the dollar itself could drop further to the downside. Here, guys, if we will shift a bit chart, you will see that we have this support area. It's around former top, and this stands around 88, maybe 87 by the dollar index. So this is really big journey to the downside. Of course, we can't predict definitely that this anyway will happen, but currently we do not see any signs that could tell us the opposite. That's why currently we are watching for possible action right to this area. It means that currently the situation on the dollar-related currencies we should treat in the perspective of the possible weakness of the dollar, and that already partially is starting to become the reality. So right now we will take a look at the euro currency again. Today is very important moments why I have decided to talk on the euro currency, because if you take a look at the monthly chart, we mostly talked on this grabber, and that was very significant for us because it suggested the taking out of this loss. As soon as the setup on the dollar index has failed, I mean the bullish setup, and dollar has turned to the double repo pattern, you can see that euro has moved up and taken out of this top of this grabber. It tells that it mostly has failed, and that is simultaneously significantly bullish pattern, and from that standpoint we could count probably on further continuation on the euro currency. That's very important. Right now on the daily chart in the short-term perspective we see also some other signs. So this is the top of the grabber, but that also was the C point of this A, B, C top pattern, and market has hit only minor 618 extension. But as soon as market already has erased and taken out of the C point, it means that this ABCD pattern has been destroyed, and we can't rely on it anymore with the possible expectation of the further downward continuation. Another bullish sign that we see right now, take a look, that market has moved above the monthly pivot resistance 1. And this usually tells that this is not just a retracement within the bear trend. It tells that this short-term bullish trend is forming right now. Also, take a look at this breakout of this consolidation that theoretically should be the bearish flag, but the opposite breakout out from this area shows us the surprising breakout, let's call it, because this is the bullish breakout of the bearish pattern. That's why currently trend, of course, has turned bullish, of course. So right now we're dealing mostly with the bullish action on the euro currency. As we mentioned previously, here we could get another pattern that we could get here is the butterfly. It's really probable, and the destination of this butterfly probably will be somewhere around this upper border. So somewhere here. This in general stands very close to the 127 extension. It's approximately 119 area. So that's our expectation on the euro currency. It's difficult to say whether it will be fast action, will it be slow action, but in general the picture that we see right now on the dollar index doesn't contradict with the possible real significant action. That's approximately 5 points from the current level to the upside. So meantime, if we'll take a look at the 4-hour time frame chart, the market right now could show some minor retracement down, because it has completed this A, B, C bottom D pattern. So this ABCD has been completed. The CD leg is a bit slower than it should be compared to this one, but in general pattern seems rather harmonic. Also take a look that market has taken out the weekly pivot resistance 1 as well. Now it turns to some retracement. Well, in general, guys, this retracement should not be too deep, because if you'll take a look at the daily again, and market right now stands in fact in an upward continuation with this pattern A, B, C, D continuation. So that's why since the upward action has been started, the market already has broken through very significant levels. This retracement already has happened, so probably we could accept some minor retracement, but if market will return that back down inside of this flag, that will be not good sign. That's why on the 4-hour time frame chart I have marked the border of this flag has been broken. So take a look at how it has happened. So it was resistance, resistance, market has broken up, support, and upward continuation. From that standpoint, we could accept retracement right to this area. This will be, by the way, the confluence support on the 4-hour time frame chart. Is the 3 major support of this from this low to this top, and this in general will be acceptable when the market completes ABCD. The trade retracement is normal, but returning back inside of this consolidation will not be very good sign for the bulls. That's why cloudless retracement will be till the 1350 area. So from that till that moment, we could say that our setup is valid. The bullish scenario is cloudless, and retracement down is absolutely acceptable, but breakout through this level will be not very good sign. So that's been said, currently we will be watching for this retracement down. We can't exclude even that market probably could stop on the 3-8 support, but euro currency usually likes a bit deeper retracements, maybe 50% is favorable. We'll see, but this level will be our major level to watch for a possible taking the long position. And that's our current view on the euro currency.